Investors not reacting well to the news. Major averages selling off on not just the news that we got the rate cut, that was expected, but net now the summary of economic projections is putting the Fed's expectations for rate cuts next year at only 2. And Powell there, Nancy Gensler over Marketplace, getting in a little question there about whether he would rule out a hike next year. And he seemed to say, I don't want to rule out anything because I don't know what's going to happen. Really emphasizing that he believes the economy is on solid footing right now. He was pretty firm on that point, but also really leaving the door open to a wide range of possibilities.
Yeah, strategists' response and reactions are coming to my inbox, Julie, and being described here as a hawkish cut is how some are placed this, meaning, yes, they reduce rates by 25 basis points, but they also, of course, signal less easing in 2025. And to your point, it was interesting to hear Powell talk on the economy, clearly conveying this positive message. He likes what he sees, says we're in a really good space. But on inflation, he was saying, listen, broadly on track, but he said a little bit more stubborn, moving sideways. Now, he was asked toward the end there, would the Fed just simply accept that we're not going to get back to your target? Not surprisingly, Powell saying, no, we're going to get back to 2%. He's confident in that, but he did acknowledge, listen, it has taken longer.
A couple other things to mention from this press conference there. He was asked about fiscal policy, and he said, we don't know what the fiscal policy is going to be, and we don't know what the outcome of the fiscal policy is going to be. That said, interestingly, we know that Beth Hammack dissented today and said she did not want to cut rates. He said some people in the meeting did take a very preliminary step and start to take a look at sort of highly theoretical conditional effects of potential fiscal policy. He said some people did not take that into account, and some people didn't say whether or not they took that into account. So obviously they're at least having the discussions about the potentials for fiscal policy and the effect on inflation and the labor market, even if, they're sort of preparing to take that into account, even if they don't yet know what those effects are.
He talked about how you kind of tread a bit more carefully, right? I think he sort of likened it to Julie to, in the same way you sort of drive on a foggy night, you get a bit more careful. And he's right, because you have tremendous uncertainty around taxes, regulation, tariffs, and immigration.
Just want to put a fine point on what we're seeing in stocks, because we are seeing a pretty dramatic sell-off going on in the major averages. The S&P 500 on its worst track for its worst day since October 31st, the NASDAQ since November 15th, and the Dow since September 3rd. And speaking of the Dow, it is now on track for 10 straight sessions of declines, which would be its longest losing streak. Nine was going back to 78. This is going back to 1974 potentially if it falls for 10 sessions in a row.